Welcome back to Boni's Life, where we decode the crypto markets with precision and just enough wit to keep you awake during those late-night trading sessions. I'm Boni, and today we're diving into what I call the great crypto crossroads of August 2025. Bitcoin is dancing around $111,000. The total crypto market cap is flirting with that $4 trillion milestone, and somewhere out there, a whale just dumped $2.7 billion worth of Bitcoin faster than you can say diamond hands. The Fear and Greed Index sits at a neutral 51, which in crypto terms means everyone's basically shrugging and asking what happens next. Today, we'll analyze this market through three lenses: short-term traders who measure success in minutes, mid-term traders who think in weeks, and long-term investors who probably have Bitcoin addresses tattooed somewhere discreet. From technical indicators to fundamental analysis, we're covering it all while examining what happens when the Federal Reserve sneezes and the entire crypto market catches a cold. Let's start with the numbers. Bitcoin trades between $111,000 and $111,400, down from its year-to-date high of $124,198. The total cryptocurrency market cap sits at 3.86 to 3.94 trillion, having increased 1.9% in 24 hours. We're literally knocking on the door of that $4 trillion milestone. The 24-hour trading volume reached $178.2 billion, with the derivatives market showing $135.76 billion in Bitcoin open interest. The Fear and Greed Index reads 51, placing us in neutral territory after climbing from fear levels at 47. But here's the plot twist. While everyone was cautiously optimistic, a Bitcoin whale unloaded 24,000 BTC worth $2.7 billion, triggering a flash crash that resulted in nearly $1 billion in liquidations. Over 203,687 traders faced forced position closures, with $818 million being long positions. This reminds us that in crypto, optimism without proper risk management is just expensive hope. Short-term traders, minutes to hours. Looking at 15-minute charts, Bitcoin shows consolidation between $110,800 and $111,600. The RSI hovers around 45 to 50, indicating neutral conditions. Volume spikes during downward moves suggest sellers are aggressive at lower prices, but buyers defend the $110,800 level. Key levels: resistance at $111,600 and $112,200, support at $110,800 and $110,200, a break above $111,600 with volume targets $112,200, while a break below $110,800 could push toward $110,200. Midterm traders, days to weeks. On daily charts, Bitcoin tests critical support between $110,000 and $111,500. The 50-day moving average at $108,500 provides dynamic support, while the 200-day moving average sits at $95,200. The MACD shows bearish divergence, and volume analysis reveals decreasing volume on up moves. Key levels: major resistance at $115,000, critical support at $108,500, major support at $105,000. The setup suggests 2 to 4 weeks of consolidation before the next major move. Long-term investors, months to years. Weekly charts show Bitcoin in a strong uptrend from late 2022. Currently in healthy consolidation. The weekly RSI at 65 isn't extreme, and monthly charts suggest we're in the early stages of the fourth major bull cycle. Historical patterns indicate potential for $200,000 to $300,000 over 12 to 18 months. Key levels: major resistance at $130,000, cycle support at $85,000, bear market protection at $60,000. With Fed rates at 4.25% and inflation around 3%, real rates are positive at 1.25%, creating headwinds for Bitcoin. However, growing federal deficits may eventually force more accommodative policy. The institutional adoption story continues with mixed ETF flows, while corporate treasury adoption progresses steadily. The US Crypto Week in July established clearer frameworks for stablecoins and digital commodities. Over 110 crypto industry participants have urged Congress to protect developers, while traditional Wall Street pushes back against pro-crypto legislation. This regulatory evolution is healthy for long-term development. Bitcoin's hash rate continues trending upward, indicating strong miner confidence. Long-term holder supply increases, reducing liquid supply for trading. The derivatives market at $135.76 billion shows sophisticated institutional participation. The Fed's next meeting looms large. Any hawkish signals could trigger outflows from risk assets, while dovishness could spark massive crypto rallies. The key is watching not just what they do, but how they communicate future intentions. EU's MiCA regulation provides clarity but imposes compliance costs. Any softening of China's crypto stance would be massively bullish, while crackdowns create headwinds. SEC enforcement actions continue affecting specific crypto sectors. Bitcoin's safe haven status remains evolving. Sometimes it acts like a risk asset, other times showing safe haven characteristics during currency crises or capital controls. Energy market transitions also affect mining economics and network security. Short-term trading. Range trading: buy near $110,900 support, sell near $111,500 resistance. Risk 1 to 2% per trade with 1 to 3 risk-reward ratios. Breakout trading: enter long above $111,600 with volume confirmation, targeting $112,200. Enter short below $110,800 with volume. And scalping: use 15-minute RSI divergences at key levels for 0.2 to 0.5% moves with tight stops. Midterm trading: 50-day MA bounce. Enter long on daily close above $108,500 after testing, targeting $115,000 with stop below $106,000. Macro hedge: consider long Bitcoin, short traditional risk assets if expecting crypto outperformance. Volatility expansion: position for increased volatility through option strategies when implied volatility is low. Long-term investment: dollar cost averaging fixed weekly monthly investments with tactical adjustments based on fear and greed index extremes. Institutional mimicry: track ETF flows and on-chain institutional accumulation patterns. Cycle approach: we're 18 months post-halving in early to middle bull market stages. Develop systematic profit-taking as cycle matures. Risk management: position sizing: never risk more than you can afford to lose. Crypto should represent 5 to 10% of total portfolio for most investors. Stop losses: use them, respect them, don't move them against you. Emotional discipline: develop predetermined entry-exit criteria and stick to them. We're at a fascinating inflection point, with Bitcoin at $111,000 and the market approaching $4 trillion. The technical picture presents mixed but generally constructive outlooks across all timeframes. Fundamentally, the space continues maturing with regulatory clarity emerging and institutional adoption progressing. The key is matching your strategy to your time horizon. Whether you're scalping 15-minute charts or building generational wealth, there are actionable approaches for navigating these markets successfully. Remember the principles that separate successful traders: proper risk management, emotional discipline, continuous learning, and humility to adapt when wrong. Thank you for joining today's analysis. Like this video if it provided value, subscribe for more market insights, and hit that notification bell. Until next time, this is Boni reminding you that in crypto, fortune favors the prepared mind, disciplined hand, and patient heart.